is the stock market crashing up, and is that even possible? What do we mean by that? Well, I'm going to talk about that, my thoughts in this video. For those of you that are new here, my name is Forrest. I invest stuff. I'm a day trader. If you want to learn how to day trade, go ahead and kick the link. Kick it like it's a soccer ball. Now click the link down below in this video, guys. We will get you right. We trade futures, we trade options, mostly in the swing trades, but in any case, we are real traders. Yeah, no shortcuts, but we will show you the long and trusted path to success. In any case, let's talk about what a market crash is. All right, so typically when we think of a crash, we're talking about a systemic collapse of the market in some way. Individual companies will crash all the time, and so let's use the example of a company, then we'll talk about the stock market, then we'll actually take a look at the charts, and I'll give my quick thoughts on that. So in terms of a company, if you think about why a company crashes, why the stock of a company crashes, I should say usually there is a failure in the business, which is key to an actual stock market crash, whether we're looking at up or down. Something in the business has went catastrophically wrong, which has caused their stock to blow up. And the reason that stocks change price is due to what us as traders or investors think the future value of the company is. It's not based off of present cash flows. It's not based off of anything that's really happening today. If you look at the price of Walmart, if you look at the price of Nvidia, if you look at the price of Microsoft, if you look at the price of Pfizer, if you look at the price of whatever your favorite stock is and all the discussion around it, price today is based off of future cash flows. It's based off of what people think the company is going to output in the future, and we're discounting that to some price today, right? Some of it is mathematical, most of it isn't. There's a lot of math to make up a magical number, which is whatever the auction, which is the market, decides the current price is. Cool. So how does that catastrophic failure happen? Well, maybe the business took out too many loans, or there's bad management, the CEO does something illegal, there's some catastrophic failure in the business, a bunch of debt, immediately becomes due because some business deal didn't get done right and some contract blows up, stock crashes. The stock faces, some serious headwinds that causes it to crash. So that is kind of the fundamental reason why a stock will crash. There's something that changed in the business. And then we have technical reasons. I, as a trader, I might have a position in the stock and then I see that it's down 20%. It's down 20% when the normal day-to-day change is 1%. Ugh, that's not good at all. Something that normally goes plus or minus 1% on a day, that's down 20% on a day, that's catastrophic. I'm not too interested in bag holding this. So I go ahead, open up my broker, and I hit sell. You know who else is selling? Everybody else. Everybody else is selling. So now we have a race for people to sell as quickly as they can, because once I hit sell, the price goes down a little bit more. There's a lot of sell side pressure. So the person who got on just a little bit after me looks, he's like, oh crap, now it's down 21% on the day. So they hit sell. The next person looks, oh crap, now it's down 21.5%. So they hit sell. And everybody's waiting, but nobody wants to try to catch the falling knife, right? The market's just going down and down and down to where all the people who have serious positions are now liquidating their positions. And this is big, right? We're not talking about speculators. We're not talking about people who just get in and out of the stock. We're talking about people with serious large positions start to liquidate positions. This is liquidity that normally does not exist in the stock on a day-by-day basis. Huge amount of liquidity is showing up as sell side liquidity, right? All of these people are exiting their positions. They're selling into people who are essentially trying to catch this falling knife. Market makers are, meeting them at the market. Stock is crashing. Okay, so that's kind of some of the technical reasons why there's also a lot of options flow that can force this, right? People shorting it, all of that activity. But in general, there's a huge amount of liquidity of people who are putting offers on the market trying to get out. So how does a market crash upwards? How do we end up with an upwards crash? It's a downwards crash. Let's talk about an upwards crash. There's a few different hypotheses and theories that I have for this, but one is, let's just use a car, for example, and then we'll get back to the fundamentals of the economy and the business. A car doesn't blow up when you drive it slow. Just think of the car as the engine. And I know I'm using two different analogies here. I promise I'll get back. Think of a car as an engine. When you push it to its limit, that's when it blows up. It overheats. You could overheat your engine, for example. It gets too hot, then it blows up. I think, this is one of the things we've been talking about in our Discord, is that the only way we're going to actually get a crash due to this super high inflationary environment that we're in, everybody's talking about high interest rates, all of these things, how that should give a forward-looking downward pressure on prices because money's harder to get, and when money's harder to get, it's harder to build more things because you need money to build more things. It's a completely inverse environment from what we had before, where money was free, which means I could just expand and grow and grow and grow because my monthly liabilities were very, very low, right? I'm borrowing money for very cheap. Money was quote unquote almost free. Now money is very, very expensive. And when money is expensive, I have to pay it back soon. And the cost to pay it back soon is even more than it was before, which gates the amount of time that I have to actually execute a project. If money is expensive, I don't want to spend all day executing on a project. So you're driving fast in our, economy engine, overheating. So I think that the market right now, I think all of these downward pressures are correct on the market, right? And the systemic failure that we're actually seeing is opposite from the example I just gave, where a bunch of investors provide sell-side liquidity because of some systemic change in the business. At the macro level, what we're actually seeing is people trying to force prices higher because everybody wants to maximize their gains before the oncoming crash, which seems a little counterintuitive. But what we know is during COVID in particular, companies were making record profits. We're printing a ton of money. Companies are making record profits. Inflation is super high. High inflation environment. Companies are making a lot of money. Engines overheating. Companies make more and more money. People can't afford things, but somehow the economy is doing well. Your average American is not doing well. Things are getting more and more expensive. Companies are making more and more money. The economy is doing well. Your average American is not doing well. Companies are making even more money. The economy is doing amazing. Americans are not doing well, but they're still participating. They're still scraping by. Everybody's scraping by. They're staying in the game. They're still able to afford the things. But eventually, guys, what is going to happen, and the way that this systemic collapse is going to happen, is that the economy is going to overheat. It's going to overheat. And what'll happen is when you're in a problematic situation, normally where you could just go and borrow some money for cheap, like, oh yeah, well, let's borrow some money. Rates are very, very high. There is no low cost bucket to bail us out now. All the tools to bail us out are very, very expensive. Money is very, very expensive. So every single company right now that has been running a hot business, a lot of OpEx, which, a big part of OpEx, quite frankly, is human capital, right? And that's another way to say having employees. Having employees are one of the biggest costs for a business. They're not going to have a way to get funds to weather the storm. So any company that does not have hay in the barn, who has not been saving for a rainy day, which are probably most companies, because most companies are just ran by opportunistic idiots, which you can argue with me on that. I'm like, oh no, these people are smart. Anyways, they're not. Right place, right time. But a lot of these people don't have hay in the barn, and they're going to blow up. And that's why the market is cyclical, right? You can basically count on it. You can just count on there being this hot cycle, and then it blowing up. And so that's exactly what I think is going to look like. I think this upward crash is just the economy overheating before the next cycle. I think people expected when we were down in, thinking of the ES index down in like 3600s, whatever last time, like, oh, that was a crash. But no, that wasn't a crash. This is a buying opportunity. And what we're going to see here, there's a lot of people who are willfully going to overheat the market because they want to, sell premium. They want to rake in a huge amount of premium on the option side, selling calls when probably call flow is going to be the highest when we're at the top. People are going to be selling hella premium. MMs are going to be selling hella premium at the top. Smart speculators are going to be selling hella premium at the tops, and a lot of people are going to get blown up. So let's actually open the chart, and I'll tell you where I think we could go to in a true, just full on overheating situation. Boom, bam. So we're back on TradingView. Just like in every video, if you're new to TradingView, this is just a charting tool. I don't trade with this. Probably the best charting tool out there. So if you're looking for charting software, check it out. I'm not an affiliate with them. I don't have any links for you. Just go to tradingview.com and start using it. It is an amazing tool. It's what I use every single day. Also what I film my videos in, and what we're going to use right now. So we're going to look at ES on the daily time frame. So I have the daily time frame up here. All of these charts are ES, by the way. It's the same ticker 8 times. So I have my multi-time frame analysis. That's just how I like to do it. My current trading regimen. And on the daily chart, you see that I have quite a lot of lines. So there's a few little notes here. We can ignore all those, and let's actually just hide all drawings. The one indicator that I want though is the visible range volume profile, which should be showing up and just isn't. Let's see why that is not working. Not sure. All right, well, we'll ignore that. It doesn't really matter. So there's a few things here. So we have this pivot down here at 4120. We'll put a line down there. Oh, we actually can't remove all drawings and do this at the same time. That is really, really annoying. Well, that's okay. We'll leave it on. We'll get rid of that trend line. Don't need it. So there's this pivot down here at 4124, which we'll do with the orange line. There's that pivot. And then the swing high, what I would call in this time frame, if you imagine that this is like a 3-minute chart, the actual swing high pivot to pivot is up here at 46.75, which you can see I already have notated as a line here. So if we were to sweep that, I know it seems crazy. We're on the daily time frame. We went from 41.22 up to 46.75. If we were to sweep through that, that means go through the price, clean up all this liquidity. We would probably sweep up to the next liquidity target, maybe double top here at 48.10, right? 48.10 seems crazy. Most people I see on Twitter and elsewhere aren't looking for prices up here at all. And then if we went really, really crazy, if we really, really wanted mass hysteria, if we wanted full on greed, we would retest 49.84, which is almost 5,000. I'm telling you guys right now, if we get to here, probably we'll sweep it. Now I'm not saying this is going to happen. I think we're probably going to sweep 46.70. I could see that if we go on full on crash mode. I'm going to analyze the market every single day. If we sweep this, I guarantee you, then yeah, we're in that upward, we're overheating situation. We're going to crash all the way up here, 48.08. I don't think we'll double top. We'll sweep that. And then if we don't bounce somewhere in here around 49.11, we'll get up to this 49.80. Get to 49.80, we're going to sweep it. We're going to crack it. We're going to go mass hysteria, and then we'll crash. So we'll crash like somewhere up here, 5,070 or after. That's an arbitrary number. The point is that we're going to sweep this 49.80 level definitely before we crash. Now, that's just my hypothesis. That's what I think for the full overheat situation. One of the things that we're really good about is updating our thesis. So even though I put this here, I know there's going to be at least one of you guys is like, if something else happens, you're like, oh, something else happened. You're not an oracle, Forrest. You're not the best trader ever. It's like, well, on the day that happens, I will probably have made money still by updating my analysis. So the point of planning and looking at the market, guys, is to be prepared for outcomes, to be able to read them. So I want to be prepared for an upward crash so I could play it long. If we get some like deep red reversal down to 44.40 tomorrow, I'm not going to look for that. I'm going to update my thesis, see how much volume came in, and see if we're looking for like a 50 fib retracement on this pivot to pivot that would form. But there are higher, more likely to occur scenarios, and then less likely to occur scenarios. Wow, it's hard to talk right now. And that's really what this analysis is for. So you will never see me get hung up on anything that I say here. Only thing that I care about are the trades that I actually put on. So if you see me put on a trade, and I do share all my trades in my Discord, share those trades there. I give up-to-date analysis on those, the ones that win and the ones that lose as well. So that's really what you should be looking for, is where I'm actually putting my risk in that regard. So that's a good question. Where am I putting my risk? Well, right now I'm in some swing calls on some tech stocks. Nvidia still. Nvidia has earnings this week. It's interesting. We have Thanksgiving. I'm looking for a little bit more upside, and this kind of does look like a flag on the daily. It's a little flaggy, little weird flag there. Lower, decreasing volume here, but we're coming into Black Friday. Black Friday this week with Thanksgiving should be an interesting week overall. My advice to you is look at this time period, look at November every year going back, and incorporate that into your analysis, as well as just the last quarter of the year. So there's 12 months in a year. Quarter is 3 months. So that would be December, November, September, October. I can't think of months. September, January, February, March, April, May, June, July, August, September, October, November, December. Wow, I just went full on brain fart. You can leave that part in. It's whatever. Yeah, but the last quarter is October, November, and December. Yeah, that's really my thesis for the upward crash, guys. I think it's full on overheat. I would look for an overheat of the market before a crash. We're not going to get a slow descent like this. It's not going to be a little trickle down, crash. It's very unlikely in this environment. It's too obvious. We have very high inflation. The Fed has said they're keeping their foot on the pedal still, even if they're slowing it down. Interest rates are still high. They're not going to cut those anytime soon. It takes years for those to implement. The real estate market is still overpriced, though I see prices coming off. Finally, now in some markets, I'm down here in Miami, I see some prices come down by $100,000 or more, but real estate ultimately is a local market. So what we need to see is a mass coming off of prices in the real estate market to really impact what is core to inflation, which is people's ability to live in a home. Rent prices are also overheated. People don't talk about that. Rents are way too high. Rents need to come down. Mortgage costs needs to come down, which the only way that's going to come down in a high interest rate environment is by the actual price coming off of a lot of these houses. And yeah, the economy is just going to have to reckon with the second and third order consequences of that. There's going to be a lot of people who are upset, bought, expecting their home price to go up 30% every year, when they actually lose 30 or 40% on that price. And that's just part of the game. It sucks, but I don't feel bad. I think as Americans overall, this expectation for housing to be a vehicle of wealth instead of just economic security, or more so a place to live, is gotten out of control. I mean, there was a period where prices were going up 30% every year. That's unsustainable. You're really not thinking about the people coming after you if that's your expectation. If you think that the next generation should just hold that bag for you so that you can be rich in your retirement years doing nothing. But I digress. In any case, that's my thesis for the market. Go ahead, subscribe. Help me get to, I'll go to this again, 3,000 subscribers. I have 2,986 subs as of this moment. We're 14 away from 3,000, guys. By the time this releases, might be at 3,000, but you can still help me get to the next number. I'm here to help. We have a free chat in the Discord, so it is a paid Discord. There's a free chat. Please do ask me questions there, guys. I'm here to help. It's my passion. I've made hundreds of videos. I don't do this for any other reason than to help people. It's my passion. I like being creative, like just helping people and interacting with you guys. It really is one of my passions. So please ask questions. Hit me up there. You can shoot me a DM. Some of y'all hit me up on Instagram. I'm not super responsive there, but I'll check it out. But we'll definitely get you in the Discord, myself, or even some of the other traders there. The admins are super helpful. All the admins are super helpful. beautiful soul, the other trader. If you see his name pop up, he live streams every day. He's my partner in crime in the Discord. He is an amazing trader as well, and you could definitely listen to anything that he has to say. Check out his Twitter as well. I think it's just Soul Trades. But in any case, that's enough of that. See you in the next video. Peace.